Welcome back, students. This is lecture 2, which will be also our last lecture of residential status assessment year 2022-23. And this for CMA Intermediate, December 2023, new course, okay, as well as old course. So this will hold good for both old and new courses, okay. Fine. So let's start. Today we'll be completing this chapter. So we had already completed till here. I'll just show you 1 minute. We had already completed continuous discharge certificate, I told you, and then we had seen additional conditions. Okay, so we did this one provision. Okay, so this is one illustration we did, and there were two illustrations I said that we have to complete. Okay, so here we'll just quickly repeat the basic and additional conditions before we continue. Okay, so basic conditions basically are only two. Okay, one is it should have been in the previous year for 182 days or more. So remember that here, this is your basic condition. Okay, he is in India for a period of 182 days or more. Okay, during the previous year. Second condition is in India for 60 days or more during the previous year and 365 days or more during the 4 years preceding the previous year. Okay. Then we have some exceptions here. Remember that the exceptions never affect your point 1. Always affect your point 2 only. So in other words, if you have a person, whatever be his criteria, okay, be him be a foreign citizen, Indian citizen, whatever, take any criteria. If he has been in India for 182 days or more, okay, just need not see any exception, anything. If this condition is getting fulfilled, just close your eyes and you can say that he is a resident. Okay. So now we have got some exceptions, 3 exceptions which we saw. Okay. So first one is okay. So now there are 3 exceptions, A, B, and C. Okay. This first exception is that he will be treated as resident, okay, only if he is in India for 182 days or more. That is, in short, what we are saying is that the second condition, only first condition will be available, applicable. Such person who is going out. So I show you by an arrow so you will remember. Okay, the person's going out. It will be an Indian citizen who leaves India during the previous year for employment purpose or as a member of crew of an Indian ship. So in this case, what will happen is the point number 2 will get cut off. Only point number 1 will remain. Okay. And then in second one is this was going out, the second is coming into India. Okay. So this is coming into India. Okay. So for this, what you will have to do is, in this case, you have to see total income other than income from foreign sources. Foreign sources means foreign income. Okay. So that means here, other than income from foreign sources. That means we're talking about Indian income. Okay. So here I can also say that total Indian income. Okay. Okay, that is income other than foreign sources. It's total Indian income. So the second one first. It is up to 15 lakhs. Again, only basic condition 1 applies. So you have the cut off condition. If it exceeds 15 lakhs, okay, then what you have to do in the second basic condition, change 60 days to 120 days. Okay. If he is becoming a resident using this, if this is applying to him, okay, this condition is getting applied to him, then he will always become an RNOR. Okay, so you can always see here that the condition which is modified either here or here is the second condition. Okay, the first condition is not modified. Okay, it's only the second condition, right? अदिति ये डीटी का क्लास चल रहा है. आईडीटी
ओके
आपका ट्यूसडे और वेडनेसडे को है.
ओके सर
सैटरडे, फ्राइडे, सैटरडे, संडे डीटी है और ट्यूसडे वेडनेसडे आईडीटी.
ओके सर
Okay, fine. So, right, so this is your second condition, right? So always you can see what is getting modified is your second condition, second basic condition. First basic condition is not being touched, which is why I told you that if you get a situation that a person has been in India for 182 days or more than that, you need not worry about any of the exceptions. Straight away, he'll be resident and ordinarily he'll be resident. Okay. Ordinarily resident or not, you have to test the additional conditions. Okay. This we saw, and then last condition, again, using this condition, he will always become an RNOR. Okay. So this is the only condition. The condition C is your only condition where he can become a resident without seeing his days of stay in India. Okay. So as per basic conditions, if he is a non-resident, okay, still he has a chance to become a resident using condition C. Right? So what are the conditions to be seen for this? He is a citizen of India. His total income. He is a citizen of India. Conditions that we're going to see is for point C. And first, there are four conditions. First thing is see point C. Okay. He's not satisfying any of the basic conditions. So only if he doesn't satisfy any of the basic conditions, he will come here. Otherwise, your point C is irrelevant. If he's satisfying any one of the basic conditions, you need not come to point C at all. Okay. So if it's not satisfying both basic conditions, only then you will come to point C. Okay. So always first thing in point C you will see is not satisfying basic conditions. Then is a citizen of India. Total income other than income from foreign sources exceeds 15 lakhs during the previous year. Okay. Is a citizen of India. Total income other than income from foreign sources exceeds 15 lakhs during previous year. Okay, this is one condition which is required. So this condition is same as point number B earlier, which we saw. Correct. So we'll just show that to you. Here you can see. So in this exceptions, in point number B, we saw total Indian income exceeds 15 lakhs. Correct. It's the same condition. Okay. So okay, total income other than foreign sources, you can just call it as Indian income. But remember this term because in your exam they will ask like this only. Total income other than income from foreign sources exceeds 15 lakhs. Okay, these all are cumulative conditions. Okay, when I'm saying cumulative conditions, it means all these conditions have to be fulfilled. Even if one is not fulfilled, okay, then this is not applicable. Even if one condition is fulfilled, all four have to be applicable. So, and last is he is not liable to tax in any other country or territory by reason of his domicile or residence. Okay. So like we have residential status conditions, days and all, other countries also have. So he should not be liable to tax in any other country. Okay. If he is liable to tax it, this is a negative condition. Okay. If he is liable to tax in any other country, then here he will become a non-resident. Okay, through this point. Right? Like you are coming to this point only when he is not satisfying basic condition. Okay. So when you're coming to this point, we can assume that he's already not satisfying any basic conditions, isn't it? So, and if he's liable to tax in any other country, if this one point also you come to know, okay, then these points will not apply to him. Okay. So this is these are what your 3 points of exceptions. Okay. And then we had additional conditions. So if anyone is a resident using point number using your basic conditions. Okay. If he is a resident using your basic conditions, satisfies any one of basic conditions, he becomes a resident. Resident can become ordinarily resident or not ordinarily resident. Okay. So resident, he has become a resident using basic conditions. Okay. There are further 2 classifications. Okay. One is OR. It is also called ROR. So OR is ordinarily resident or resident and ordinarily resident. Okay. Or he can become non-resident. Sorry, he can become not ordinarily resident. This will be NOR or RNO. Okay. Non-resident is there in the first classification, resident or non-resident. Yes. Okay, so if he is resident, he can be one of these two, OR or NOR. Okay, so when will he become an OR? That conditions we are seeing. See, this is also cumulative. Okay, these 2 conditions are also cumulative. So both conditions have to be fulfilled. Okay, both conditions have to be fulfilled. It is the first condition. So this is just showing ROR and RNOR. Okay. For ROR, the conditions are must satisfy both conditions. Okay. Resident in India at least 2 out of 10 previous year preceding the relevant previous year. So in additional conditions, what you have to understand, we never look the previous year. For basic conditions, the previous year is very important. Yeah, you look at certain other things also behind the previous year. Always previous year is there in the condition. Okay. But in additional conditions, you always look at the year before the previous year. Okay. So here is resident in India at least 2 out of 10 previous years immediately preceding the relevant previous year. Okay. So it should be resident in at least 2 out of 10 previous years immediately preceding the previous year. Okay. So here for testing that resident in India in 2 out of 10 previous year. Okay. Whether he was a resident and ordinarily resident or not ordinarily resident, that is immaterial. Okay. It was the law just said that he should be a resident in India. Okay. That is, he should have satisfied basic conditions. You need not check additional conditions here. Okay. You will not have that much of data also. Right. So here he must be a resident in India at least two out of 10 previous years, immediately preceding the relevant previous year. Okay, so we just have to check whether he is resident. Okay, don't worry about ROR and RNOR. Okay, so again it is immediately preceding the relevant previous year. Second point is also immediately preceding the relevant previous year. So this is resided in India for 730 days, which is double of 365. Okay, 730 days or more during 7 previous years immediately preceding the relevant previous year. Okay, so this is also one point you have to check. Now these two are cumulative conditions. Cumulative means you have to follow it together. Okay, right? If only one is satisfied, then he will not be an ROR or OR. Okay, both are same. OR and ROR. Okay. OR is just the short form of ROR. Just because instead of saying resident and ordinarily resident, you just say ordinarily resident. Okay. Fine. So this is your OR or ROR. These two conditions have to be fulfilled. If he's fulfilling one, then still he'll become RNOR. He has to fulfill both to become RNOR. Okay. If he's fulfilling only one or not fulfilling any, in both cases he will become RNOR or NOR. Okay. Fine. So this is your, these are your additional conditions. We just revised a part of this. Okay. Now, okay, so now exceptions is like what we have seen in your, we already seen in your basic conditions. Okay. So you need not repeat it again here. So exceptions was in your basic conditions exceptions, point number B, okay, where we said that he will only become RNOR through this route. That is one exception. Second is that exception C, which had four conditions, correct? So if he goes through that route also, he'll only become RNOR. That's the two things which are stated here. Okay. So I'll show that to you again. Okay. So these were our exceptions. Okay. This is the first exception. This is exception B. In exception B, there are two. One is to 15 years, 15 lakhs. Total income other than foreign sources is 15 lakhs. Second is exceeds 15 lakhs. So this one is what you have to see. Okay. Here he will always become an RNOR. If he's going through this exception, okay, if he's a part of this exception and his income is exceeding 15 lakhs, and so he will always become RNOR. Okay. So these conditions you should know. Okay. And the last one is C, this point C. Okay. Here also, if he becomes a resident through this route, he'll always be RNOR. Okay. So these conditions also you should know. Fine. So now after this, we did this one, this problem, correct? In this problem, the first four we had done, correct? And these four, I told you that I will get back on this. Okay, these four. So here, okay, now let us see this E, F, G, and H. So we have been given all these things, citizenship, whether is a person of Indian origin or not. 1 minute. Okay, so this is citizenship. Is he a person of Indian origin? Okay, these three are yes. This is no. Okay, and income excluding foreign source. We'll use this only if required. Okay, if he falls under exception, only then we'll go for this. Otherwise, we'll not need this data. Okay, this is given. Is he liable to pay tax in any other country? No, all are no. Okay, and after this we have here it is given that dual conditions are satisfied. Okay, additional conditions are satisfied by all four. So now the main thing, you will always start with basic conditions for residential status. This is your key data. Stay in India during previous year. Okay, so is these four. Out of these four, see, one is more than 182 days. So what did I tell you for more than 182 days or 182 days or more? Because 182 days is also inclusive. Okay. So 182 days or more, if it is there, you just do not have to see any exception, any condition. Okay. He just is a resident, whatever is he. So You just have to say he is a resident. But here we have already been given that they are satisfying additional conditions. So this becomes ordinarily resident. Fine. Okay. So now in this problem, apart from this, there are some assumptions which they have used, which in exam it will be given to you clearly. Okay. This is an old example, which is why they have it is just in tabulated manner. Some assumptions is what they have not given. Okay. The assumptions which they have taken is not here. So let's see what it is. One by one we'll go. Let me just show you H first. So we have seen this one. This is an ordinarily resident. Okay. So now in H, he is a foreign citizen. Okay. Right. So we know that exception A, okay, persons who are going out of India, correct? I showed you like this, right? Persons who are going out of India. This that was exception A. There it was clearly written an Indian citizen or person of Indian origin. Sorry, an Indian citizen, not Indian origin. Indian citizen living in India during the previous year. Okay, for employment purpose or is a member of crew of an Indian ship. Okay. So if he is a foreign citizen, exception A anyways is not applicable. Okay. And for exception B, for a person who is coming into India, their Indian origin is also okay. Indian citizen or person of Indian origin, it is exception B for coming into India. Okay. So he is neither. Anyways, none of the exceptions are going to be applicable to him. A and B. Okay. Right. Then, so what we will see first is you will see this. You'll start your answer using this. Okay. This is 85 and this is 380 is stay in India during 4 years the immediately preceding the previous year. Okay. 380. So you know that he cannot satisfy the first basic condition, but you know that he can satisfy the second one, 60 days or and 365 days. Okay. That he can satisfy. Okay. Only thing you have to check is does he fall under any exception? Okay. The only thing you have to see is does he fall under any exception? Exception 3, you will only go for if he is not satisfying any other exception, otherwise not. Correct? So we have seen here that exceptions 1 and 2 anyway will not apply. Okay. So then assumption which I was telling you here. Okay. Assumption which they have followed here is so he is a foreign citizen. Okay. He is a foreign citizen and in India he was only there for 85 days. So you can just fairly assume that he was on a visit to India. Okay. In this case, he is a foreign citizen. Right? If there is a foreign citizen, you come to know he is in India he was in India only for 40, 50 days. What can you assume? He came on a visit to India. Correct? Right? So, so here, that's why your assumption B is what is used. He came on a visit to he came on a visit to India. So that you can assume. But if you want to use that assumption too, he came on a visit to India. He has to be a person, he has to be Indian citizen or person of Indian origin, correct? So I'll show you. Okay. So as far as assumption C is concerned, you just don't go to it. Okay. Till your basic conditions are ruled out. It is both basic conditions are ruled out. Only then you will come in. Because this is One condition is he is not satisfying any of the basic conditions. So assumption C will get activated only when he is not fulfilling basic conditions, both the conditions. Okay. Otherwise, he will not come in. So I am talking about this B. Okay. Point B, if you see, this is an Indian citizen or person of Indian origin. See, Indian citizen or person of Indian origin comes on a visit to India during the previous year. So in that case, the assumption is he has come on a visit to India. In exam problems and all, you will never have to take such assumptions. Okay, they will give you that he has come on a visit to India. Okay, based on that only you will have to decide. This is an old problem. Okay, it's just being carried forward the same way as it was. So which is why you find here that you find that assumption here. Okay? Doesn't have complete explanation. In this case of this B point, it is only for an Indian citizen or person of Indian origin. That man is none. He is neither an Indian citizen nor a person of Indian origin. Correct? Is H1. He is a foreign citizen here, and he is not a person of Indian origin. Okay, so both points do not apply. So that exception does not apply. An exception does not apply. That means both basic conditions are available to him. Correct? So that's why using second basic condition, he becomes a resident. Now, additional conditions are fulfilled for all of them. So he becomes an ordinarily resident. This is how we have F and H who are ordinarily residents. Okay. So in H, there is an assumption here. Okay. Assumption is that he is a foreign citizen and he was in India only for 85 days. We're assuming that he was on a visit. Here it is like that, but in all residential status problems, okay, it will be clearly mentioned to you that he was on a visit to India. All other problems, if you see the exam problems, okay, because this is a very old problem, it is just being carried forward as it is, which is why you have this thing. Otherwise, here there will be one more point here saying he came on a visit to India, but the exception doesn't apply, so he is ordinarily resident. Okay. So now let's move to G. Okay. Why G? Because G is very close to H. All data is similar to H. Okay. I'll show it in brown. In G we are seeing. Okay. So he is an Indian citizen, also a person of Indian origin. Okay. And his total income, excluding foreign source, does it exceed 15 lakhs? It is no. But we will only require this data later on if exceptions apply. Otherwise, will not require this total income. Okay. So then liable to pay tax in any other country is also no. Okay. And then here again, he was in India for 85 days and 380 days during 4 years immediately preceding the previous year. Okay. Which is why the same assumption has been used here. Okay. That he is on a visit to India. Okay. This person has come on a visit to India. Okay. So now next thing what you will have to see is, okay, if he's a visit, if has come on a visit to India. Okay, this person. Because see, so as I said, you will not be able to take decisions based on this assumption. But then just from a normal point of view, if you see, he is only in India for 85 days. Last 4 years, he is in India only for 380 days. If you just do 380 upon 4, it will be less than 100 days. That means he is not staying in India regularly. That is clear. Okay. So, but we do not know whether he has gone for employment purpose. That is not given. No data is there. Okay. So we'll just say that he is on a visit to India. If he is on a visit to India, okay, if the person is on a visit to India, exception B applies, correct? Right? So if exception B applies, you need to know, does the total income excluding foreign source exceed 15 lakh or is up to 15 lakhs? Okay. It does not exceed, they are saying. No, it does not exceed. So it is within 15 lakhs, up to 15 lakhs. When it is up to 15 lakhs, what happens in assumption B? In assumption B, when total income is up to 15 lakhs, that was the second point. What happens? What happens is your second basic condition gets cut off. Okay. So, which is why, see here, this one. Okay. This is the second condition. Indian citizen or a person of Indian origin, okay, comes on a visit to India. Okay. The fourth point, the fourth problem which we did, he was a foreign citizen. He was not a person of Indian origin. This this person, he is an Indian citizen also, okay, and is a person of Indian origin also, because it's not necessary that all Indian citizens will be people of Indian origin also. Okay, because you can also take citizenship. There are foreign people also who take citizenship. Okay. There are many, who have applied for Nan Sami is a famous singer from Pakistan, got Indian citizenship. There are many such people who take Indian citizenship. They are not people of Indian origin. They may or may not be people of Indian origin. So here, this person is Indian citizen, okay, and he's also a person of Indian origin. Any one you can use. And he has come on a visit to India, and the point which is applicable is this one. His income is up to 15 lakhs. So only basic condition one applies. So he has to be in India for 182 days or more. Okay. But he is in India for only 85 days. Right? He doesn't satisfy that condition. So he straight away becomes non-resident. Okay. He straight away becomes non-resident. Correct? Is already gone into one exception. You need not check any other exception. Okay. Because he's gone into a specific exception. Okay. So that's how he has become NR. Right? In this problem, only thing is there are some assumptions here taken. Okay. Assumptions are valid that way, but you will be given if he has come on a visit to India, that data you will be given always. Okay. So we have done F, G, and H. Only thing remaining is E. Okay. So let's see what is there in E. He is a foreign citizen, okay, but he is a person of Indian origin. Okay, we are doing this one. So he is a foreign citizen, okay, but he is a person of Indian origin, okay. And total income exceeds 15 lakhs is yes for him, okay. Is liable to pay tax in any other country? No, okay. And his stay in India is in the previous year is 138 days, okay. His stay in India is 138 days. For 4 years immediately preceding the previous year is 380 days, okay. So this also is a case of a person of Indian origin on a visit to India, because he was in India only for 138 days. For a major part, he was not in India. Okay. And here also for the 4 years, he has been in India for less than 100 days per year. So it suggests that he's on a visit to India. Okay. But we should not work on suggestions. Okay. So here for this to be a complete problem, you need to have one more thing. Like they've given here is a person of Indian origin, total income. Okay. Has he come on a visit to India? Yes, no. That one more line is required. Okay. Otherwise, you have to go for the assumptions. Right? So in your exam problems and all, you will be given all details. So here then, so he's a person of Indian origin. This is a person of Indian origin who is on a visit to India. Okay, yes is there. So he's on a person of Indian origin on a visit to India. Again, exception B is okay. It here total income excluding foreign source exceeds 15 lakhs. Okay. So what part of condition B will apply to him? What part of condition B will apply to him?
120 days or 365.
Very good, very good, very good, Shruti. Okay. So it is 120 days. What will apply to him is 120 days. So 60 days gets changed to 120 days. Okay. If his income, excluding foreign sources, exceeding 15 lakhs, okay, then what happens is your 60 days gets changed to 120 days. That is your first condition. Point number B, first condition. Okay, this is point number B. This is your first condition. You can see exceeds 15 lakhs. The second basic condition, change 60 days to 120 days. Okay, this is what you have to do. And one more thing, this person, if you are going through this condition, he will only become RNOR. Okay, don't have to see additional conditions. So which is why this foreign citizen, okay, he has become RNOR directly. Although these dual conditions have been satisfied, additional conditions, but still he becomes RNOR because he has gone through exception B. Okay, so this is how this is solved. Now next problem here is I think we did this, correct? We did this in the previous lecture, right? So I'll just tell you quickly. Mr. X, aged 19 years, left India for the first time on May 31, 2022. Okay. Determine residential status for previous year 22-23 if he left India for employment purpose. He left India for employment purpose. That is the first exception, exception A. Okay. So for first exception, your second basic condition gets met. Okay. 60 days condition is not available now. There is only one condition available, 182 days. Okay. So how long was he in India? He left for the first time. First time is before this, he was in India for full 365 days. But in the previous year, he left on May 31st. So April and May, 61 days, correct? April 30, May 31. Okay. The day when he is leaving, that also will consider. It will be 61 days. So he's in India only for 61 days during the previous year. But that 60 days condition is not applicable. Okay. So he becomes a non-resident for the first point. The second point, he left India on a world tour. So exceptions doesn't apply. So 60 days condition is applicable here. Okay. The exception will apply only if he left India for employment purpose. Okay. So it is going to be so that's why there is no exception. So both basic conditions are applicable. Second basic condition, 60 days and 365 days that you can use. Okay. So 60 days in the previous year is fine. And he left India for the first time, they are saying. Okay. That means Before that, he was in India for all 365 days. Okay. So the previous year before 22-23 and all years before that, he was in India for 365 days. So easily 4 years before the previous year, 365 days, that is getting fulfilled. Correct? Each of those year he is in India for 365 days. Okay. So which is why he is resident. Now for ordinarily resident, okay, you have to test two additional conditions. Okay. First one is he should be a resident in 2 out of 10 previous years immediately preceding the previous year. Okay. So now in this case, if you see before the previous year, he has been in India for 365 days all throughout. Okay. So in each of those years, okay, he is fulfilling basic conditions, correct? Basic condition for one is 182 days. It's fulfilling 182 days conditions. He is a resident for all other previous years. Okay. So additional condition one is fulfilled. Condition two should be in India for 730 days or more during 7 days. Easily is there. So in just 2 years, he is there for 730 days. Right? 365 days. 7 days, 7 years, he will be much more than that. So he is what? He should be resident and ordinarily resident. Okay? That's the first one is NR. This is OR. See, it's just little bit of change is there. In one case, he has become non-resident. In another case, he has become ordinarily resident. Okay. Okay. The next problem is X came to India for the first time. Okay. He came to India for the first time on July 14, 2018. Okay. July 14, 2018. For the first time. So again, this for the first time, or okay, he left India for the first time or came to India for the first time. And it is came to India for the first time, it means before that he was not in India even for 1 day. But left India for the first time means he is a resident. He has been always a resident from the year which is previous to the previous year and before. Okay, that's why it has a bearing. Came to India for the first time. This means that he was never in India. So before July 18, okay, before this year, okay, his stay in India is always 0. Before the year 2018-19. Okay, that's what we get from this sentence. Okay, so then from July 24 to December 25, 2019. Okay, he was in India. He came for the first time in July 24. Then from July 14 to December 25, 2019. Okay, he was in India. He was in India till December 25, 2019. The next sentence is again he came to India on 5th August 2022 for employment purpose. Okay. And left India in November 25, 2022 permanently. Determine his residential status. Okay. Status assuming he is a foreign citizen and he is an Indian citizen. You have to assume. Okay, one by one. So now for this we'll have to calculate or all days in this case. So here one thing is he came for the first time in July 24, 2018. July 24, 2018 to December 15, 2019 he was in India. That is 2018-19. Okay. And then from April 1, 2019 to December 25, 2019. In these 2 years you will find days in India. Okay. Again he came back there saying that means what? What is the meaning of again he came back to India? When they say again they came back to India, that means on this date he left India. Was in India from July 24 to December 25. Okay. That means he left on this date. Okay. That's why they're saying again he came back to India in August 25th, 2022. Okay. Right. So then, so here, this year was what? 2019, 2020. Okay. Right. So 2019, 2020. After that, what is there? 2020, 2021. Okay. 2020, 21, he is not there. 21, 22 also is not there because he came back on August 5th, 2022. Okay. So those 2 years is not there. Okay. And then he's back on August 5th, 2022 and left on November 25, 2020. For these 5 years in question, first you have to count these. From when does the year gets applicable? From 2018-19. So 18-19, 19-20, 21-22, okay, and 22-23. This is what we'll have to see. These 4 years you have. Okay. So 18-19, 19-20, 20-21, 21-22, and 22-23. 5 years actually. Okay. So we'll just have to nothing, just first count the days using these dates. That's all. Okay. So here, let's do that. So this is 18-19. Okay. So just count from July 24 till March 31, 2019. Okay. In July 24, July has 31 days, correct? So just remove 3 days. So it will be 7, 8. 8 days in July. Okay. 8 days in July. So you just have to just write how many days is there. 8 days in July, August, when he was there for full 30, whatever are the days of the month, just keep putting here. November, December, okay, till March 31st. Just put whatever days of the month are here, okay. And then add it, you will get 251. Okay, 251 days he was in 18-19. For 19-20, he's there till December 15, 2019. Okay, 19-20 will start from April. Okay, April has 30 days, May has 31 days, June has 30 days, July has 31 days, August has 31 days, September has 30 days. Okay, all that. And till December. In December, he left on December 25, 2019. Okay, I'm not written it, but because they've said again he came back. Okay, which is why it is December 25 till December 25. So in December 2019, there were 25 days. So here we put 25 days. Okay, add this, you will get 269 days. Okay, after that, for the other 2 days, 2 years, 2020, 21, 21, 22, he was just not in India at all. Okay, so there is 0. So how is here? This is 1920. Okay, he went on 1920 here. Okay, next year is 2021. The year after that is 21-22, which will end on March 31st, 22. He came back on August 5, which is why he was not there in 2021 and 21-22 and 22-23. Okay, on 22-23, he was there from August 5, 22. Okay, and he went back on November 25. This is our previous year, 22-23. Okay, so let's see August 5 onwards, how many days? So in August, counting August 5, just take off 4 days, August 1 to 4. Okay, from 31 days. So it is 27 days. Okay, so here it is 21. Then just put the number of days of the month till November when he went. He went on November 15, 2022. Okay, November 25, sorry. Okay, 25, 2022. So if you add this, you are getting 130. Okay, now we have got data of all days. This is your previous year. Okay, So now first question is, first thing to be seen is, does any assumption apply to him? Okay. So any assumption you will go for will only be based on previous year. Okay. Don't have to see assumptions before the previous year. There you will just use the days to count. The main assumptions, whatever exceptions which you are going to, not assumptions. Okay. Normally you will not be needed to take any assumptions. You will have only exceptions A, B, and C. You will use only regarding previous year date. Exceptions will apply only to this year. So here, and second thing is, we'll see, they've said that he came to India for employment purpose. Okay. So the exception is he went out of India for employment, not came to India. Okay. Right. So which is why there is no exception. And hence both conditions are applicable to him. Okay. That's why both conditions are applicable to him. Okay. So now what will happen? If he is a, first thing is, if he is a foreign citizen. Okay. Anyways, if he is a foreign citizen, they have not mentioned person of Indian origin. So we cannot assume that he is a person of Indian origin. Okay. So in this case, the exception does not apply to him for foreign citizen. Okay. So which is why you can use condition 260. This is 115 more than that. Total of this is more than 365. So he is a resident. Okay. The first point is he is a resident. Now, to see whether he is an ordinarily resident or not. Okay. Correct. He is a resident. Or ordinarily resident, see, what you need, two additional conditions. Okay. First is he should be a resident in 2 out of 10 previous year. Okay. In 2 out of 10 previous year, he should be resident. Okay. Second is 731 days. Any one is not fulfilled, your job is done. Correct. So that's why if you see 7 days from the year which is immediately preceding the previous year. Okay. Before this year, he was never in India. So that's the relevance of the word he came for the first time. Okay. Here they have said first time. Okay. So which is why if you add these two, it is not 730. You should have 730 days in second additional condition, right? It is less than 730 days, whatever it is. Okay. It is less than 730 days. So here itself you know that he is ROR. Sorry, RNOR. Okay. Just seeing the second condition. Okay. If you want to see the first condition also, by that also is RNOR. First additional condition. Okay. See here, you have to see from 1 year before the previous year. Okay. Is 1 year before the previous year. So year onwards, if you start, see in the first year, he is in India for 0 years. For both the conditions, what do you need to make him a resident? He has to be a resident out of, what is the second additional condition? What is the first additional condition? He must be in
So
India.
two out of last 10 years. 2 years out of last 10 years.
Yes. He has to be in India for 2 years out of the last 10 years. Okay. So
10
for
years
that,
preceding the previous years.
yeah, he should be resident in 2 years of the preceding 10 years. Okay. So for being resident in this year, he should be in this year for a minimum of 60 days, correct? To become resident. He is not, he is here for 0 days. So he is a non-resident for this year. Same for this year, non-resident. And for this year, if we see, Okay, he is okay. 60 days is fine. Before this, you get 365. No, it's 251. And before that is 0. So anyways, here also you don't get. Okay. So for additional conditions, like even if one condition is not fulfilled, you are fine. So that's why he is an ROR, foreign citizen. Okay. Now for Indian citizen, okay. So if the second exception would have applied, then case would have been different. But the second condition is not applying to him. Second exception B is not applying to him. Okay. Reason being, he has come, he came to India for employment purpose. He didn't leave India for employment. The exception doesn't apply to him. Okay. If he would have left India for employment purpose, okay, then the second condition would have been cut. Okay. If the second condition would have been cut, second basic condition, he would have become non-resident. But the exception doesn't apply to him because he did not leave India. Okay. He came into India for employment. Okay. So that's why it doesn't apply. For him also, like the foreign citizen, he gets all the conditions. Using the second condition, he is a resident, but not ordinarily resident. So he becomes resident. For ordinary resident, same conditions which we saw for foreign citizen, you have to test the same condition. Okay, that's it. Then we have seen the um other persons also. So in HUF, what you have to see is control and management of affairs should be wholly or partly situated in India during the previous year. Okay. In HUF, you need not see number of days for determining resident and non-resident. It's only the control and management of affairs. Is where the main top decisions of HUF are taken. Wholly or partly if it is in India, resident, wholly out of India, non-resident. Now the HUF, has become a resident, okay, or a non-resident. If he has become a resident, then he can become ROR or RNOR because in HUF also that classification is there. For ROR and RNOR, what you have to see is just see the additional conditions of Karta. Okay, if the Karta is fulfilling additional conditions, HUF becomes ROR, otherwise RNOR. That's it. For other things, okay, you have only resident and non-resident. You don't worry about additional conditions. So the conditions are all same. For company, you just use the word POEM, okay, place of effective management. Okay, same thing in HUF and other persons we are using as control and management of affairs. Okay, we are using control and management of affairs here. Okay, in HUF, but in company, okay, you have to use the words which are consistent with the act. Okay, which is why you are using the word place of effective management. Same thing. Control and management of affairs or place of, just the word used is place of effective management. Now, in companies, one thing, Indian companies always resident in India. Okay, so only for non-Indian companies, you have to see whether the place of effective management is in India. This is again here it is not written, but it is wholly or partly in India. Reason being, for non-resident, you can see place of victim management is not in India. Okay, that is wholly outside India, then non-resident. And partly in India, it becomes resident. Okay, so it's very similar to your HUF. Okay, so remember here that domestic company. Okay, a domestic company can be an Indian company or a foreign company. Okay, and here for resident company, only an Indian company is considered as resident in India. So domestic company will go into this non-Indian company. Okay. After that, firm AOP BOI. Okay, same copy and paste HUF, control and management. Okay, in wholly or partly in India, wholly outside India. That's it. Non-resident is wholly outside India. Okay, just remember control and management of affair for firm is with partner, AOP, BY is with principal officer. That's it. Same as HUF otherwise. And then any other person also same as HUF. No change. Control and management wholly or partly in India or wholly outside India. Fine. That's all it is. For other persons, it's all very, very straightforward. So now next we'll talk about is incidence of tax, okay, which is a very important topic. Incidence of tax, okay. Because this is a new topic, I'll just go for a break, okay, and then we will come back, okay. So because it's a new topic. So let us be back in 10 minutes, or let's say 11:45 p.m. Okay.
Yes, sir. It was click.
Yes. Okay, so let's continue. So now next topic is incidence of tax. Okay, so this is very, very important. And the actual importance of residential status is on incidence of tax. Okay, so this table tells you which kind of income is taxable for ROR, which is for RNOR, which is for NR, non-resident. Okay, that's why it is important. So, and because you will be seeing that there are lots of litigations and court cases, Supreme Court cases pending, and lots of decision on residential status. Just to determine, a person is saying that I am a non-resident, the revenue is saying that he is a resident. That case goes for decision. Why? Because if you become a non-resident, okay, then your tax is very different than if you are a resident. Okay, there are lots of things which are not taxable for non-residents. Okay, it makes a difference even if you are ROR and RN, which is why there are lots of court cases just for deciding resident and non-resident. Okay, so let's see which are those incomes which are taxable for all these three. That is called as incidence of tax. Okay, so now there are two words used here. One is accrued and received. Okay, so here you can see income accrued or deemed to be accrued, received or deemed to be received in India. Okay, so received is what you need, whatever income you have received in India. Okay, accrued here is something where you are getting that income using Indian territory, okay, or Indian resources. That is said to be accrued in India. Okay, any income which you are earning using income in India, using your assets in India, okay, or anything, any business activity in India, okay, that's said to be accrued in India when you use Indian territory. Okay, received is receiving in India, that okay. These two things are straightforward. Now, deemed to be accrued here, okay, it means that there are certain things which law is considering that this has arisen from India. It is deemed to be accrued. Directly, you might not see a connection. The law says that it is deemed to be accrued. Okay, that's why this list is also important. What is deemed to be accrued? Okay, accrued and received are something you can very easily make out. You can make out the connection from India. So that's very easy to understand. Only thing is deemed to be accrued and deemed to be received. Okay, certain things might appear as if they have not been received in India. The law says that they will consider it that it is received in India. So it is that. Okay, right. So now, first thing is, if income is either accrued, so whenever I'm saying accrued, deemed to be accrued is included in it. Okay, and whenever I'm saying received, deemed to be received is included. So if income is either accrued or received in India, okay, it is taxable for all three. Okay, ROR, RNOR, and NR. Right? If both these, let's say both these legs are in India, taxable for all. Even if one of these two legs are in India, one is outside, it's still taxable for all three. Okay. Here you can see accrued is outside India, but received is in India. Okay. So in short, even if one of these two things happens in India, it is taxable for all three. So which is why first thing to learn this table is this. So either accrued is in India or received is in India or both are in India. It is taxable for all. Okay. It's very straightforward. This is clear. Then next is okay. So here we have till here what we have seen is all income which is which is generated using Indian territory or which is received in India. Okay, that we have, that is taxable. So then what remains after this? Okay, the income which is accrued outside India and received outside India. Okay, in these, at least one of that is in India, correct? At least one of the two is in India. So what remains after this? Both are outside India, correct? So that is seen like this. You can see income accrued and received outside India. Okay, this is now both are outside India. Okay, accrued and received outside India. This is also income accrued and received outside India. Same. Okay, right? From a business controlled in or profession set up in India. Okay, so income is also earned using foreign territories, accrued outside India. It's received also outside India, but that income is generated from a business which is controlled from India, okay, or from a profession which is set up from India. Okay, there's some connection with India, although both these things are outside India. Okay, accrued and received. Okay. This is one thing. Second one is just this is outside India. Here it is in India. Here it is outside India. Okay, same thing. From business controlled or profession set up outside India. So if just there is one connection that business controlled or profession setup is in India, then it is taxable for ROR and RNOR. It's not taxable for NR. Okay. So these many companies, all companies, even some individuals, their income are very huge. So when one part of this goes non-taxable, there is a big impact on the taxable income. That's why you find so much of litigation regarding residential status. Okay, so this is in India, then this is taxable. If that business controlled the profession is set up also is in outside India, then only for ROR it will be taxable. See, ROR is someone who is in India. Okay, is full time in India, is enjoying all Indian facilities full time, with his predominant stays in India. So all his income are taxable. Okay, there's nothing which is not taxable. It's one more point which you can remember. If it's ROR, just don't need to consider anything. It is taxable for it. Okay. But here, so if the profession is set up outside India, then everything is outside India, right? So it will not be taxable for ROR and NR. Okay. Just need to learn this table, but like if you go logically, it will become very simple. So like here, we talked about business, correct? Business controller profession set up in India. So these two are actually business income. And this one, last one, this is all income except business income. All income other than business income. For this, just follow this outside India principle. Okay. Right. So if income accrued and received outside India, both are outside India. All these are, everything is outside India. In this case, uh, it will be taxable only for ordinarily resident, like the previous one. Okay. Taxable only for them. Okay. So actually, these two are similar in that way. First one is for business income, second one is for other income. That's all. But if the business is set up in India, control in India, profession set up in India, then it is taxable for both of these. Okay. So this is pretty much your table. The last point is nothing. It just says that if your income is accrued or received outside India, but you have later remitted it to India, got your salary outside India. Okay, so when you get your salary outside India, that government will tax it automatically, correct? So that is income which is once taxed. Income once taxed will not be taxed again here. Okay, so remittances are not taxable even for resident. Why? Because the reason is tax is paid once on it. Okay, so this is your incidence of tax table. Just go through it. Okay, it's important, very important. Now, next is Ram provides the following details of income. Okay, calculate income which is liable to be taxed in India. Okay, we have to find out income which is liable to be taxed in India, assuming that he is OR, okay, NOR and NR. Okay, they have given us some income for AY 2022-23. They want to ask us which will be taxable in India if he is OR, okay, OR, NOR, NR. Okay, for all these three. Right? So basically you have to use this table and answer it. So here, first thing is, see, salary received in India from former employer in UK. Okay. So it is salary which is received in India, correct? We are receiving something in India, taxable for all. So just write it like that. OR, NOR, NR. Okay, for NR you can make a separate column. Okay. For all three, whether taxable or not, we have to see. Here itself, if you see, received in India, you don't have to see anything. Taxable for all. Okay. Second is income from tea business in Nepal, controlled from India. Here they have not given you anything about received. Okay. So if it is received in India, they will give you received in India. You can assume that it's not received in India. Income from tea business in Nepal. So in Nepal business, normally they'll receive money in Nepal only, correct? Controlled from India. So it is that point where income is controlled from India. Yeah, this one. This one. Okay. Sorry, yeah. Profession set up in India. Business controlled in the profession set up in India. Okay. Here it is taxable for these two. OR and NOR not taxable for any. Okay. Same thing you have to write there. See, which is why 10,000 is taxable for OR, and NOR 10,000 and NR is 0. Okay. Third is interest on company deposits in Canada. Okay. So they have a company deposit in Canada. Okay. It's that way, a Canadian income. But if received in India, it will be taxable. So 1/3 is received in India. 30,000 they have given. 1/3 is 10,000. 1/3 is not received in India. Okay. So 1/3 is received in India, it will be taxable for all. Correct? Income received in India is taxable for all. Fine. Second, which is not received in India, and it is income on company deposit in Canada. Okay. So it has not been accrued in India and not received in India. Okay. And is it business income? No, it is other income. Okay. So other income, what you will use is this one. Okay. This is the one for other income. Okay. Taxable only for ROR. Okay. So which is why here it will be taxable here 2/3 not received in India, taxable only for OR and not taxable for NOR and NR. Okay. Next is profit from business in Mumbai controlled from USA. So don't get confused seeing this controlled. It is profit from business in Mumbai. Business in Mumbai means you're using Indian territory. Okay. So that is accrued in India, taxable for all. Okay. Next is profit of 2002-3, some earlier year from business in Tokyo remitted. Remittance is not taxable for anyone. So 000. Income from property in India but received in USA. Property is in India, right? So you are using Indian territory to generate income, taxable for all. Okay, accrued in India it is. Income from property in London but received in Delhi. You have received the income in Delhi, taxable for all. Okay. Next is income from property in London received in Canada. Okay. Income from property in London received in Canada. The property is in London, you are receiving it in Canada. Okay. So it again falls in your other income category, which is taxable only for OR, not taxable for other. Okay. And last is same as this income from business in Zambia, controlled from Turkey. Business is in some other country, controlled is in some other country. Okay. In that case, it is taxable only for resident OR. Okay. So this one, last one, comes under this. This one. Okay. So this is how you have to decode the incidence of tax table. Okay. Understood? Right. So in this, now two things we have to discuss here. What is income accrued in India, deemed to be accrued in India, and deemed to be received in India? Okay. This is what we have to discuss. Received in India is straight away when you receive it in India. Okay. So what are the meaning of these terms? Okay. One is the income received in India. Okay. If the place where the recipient gets the money on first occasion under his control is in India, it is income received in India. So he gets it in his control, in his name, like his salary, his direct income. Okay. First occasion is in India, that is income received in India. Okay. So receipt is different from remittance. Remittance is when you are depositing it, you bought it, got the income somewhere. So naturally you have become taxable in that area. Okay, because it is income received in that country, so it automatically becomes taxable there. Okay. Right. So after that, whenever he is remitting the money to India, it is already taxed, that income. Okay. So that is not receipt in India. Fine. So as an example, Mr. X and NR received dividend from an Italian company in Japan. Okay. So receipt from an Italian company in Japan. Okay. And then he was a non-resident. So nothing would have been taxable in India for him, correct? During that year. Okay. And then he remitted that such income to India. Okay. So remittance need not be next year only. Okay. Remittance can be on the same day also. Once salary, say you are working in a foreign country, salary is credited for you there. Okay. And then you have sent it back to your parents here. Send back the money to parents. But because your salary you first received there, right? So you are going to be taxable there. So receipt is in that country. The subsequent transfer is only remittance. Okay. Okay. So this is not taxable in India, has neither been received nor accrued in India. Okay. So this is one case law. Okay. Where salary accrued to a non-resident seafarer, that is a sailor. Okay. For services rendered outside India on a foreign going ship. He is a non-resident. Okay. He is rendering service on a foreign going ship. Okay. Non-resident in a foreign going ship. Okay. And that is the salary which he is getting. Correct. So we only have two classifications for this. One is business, one is non-business. Correct. So his is non-business. So only ROR is taxable for such income. Okay. But he is a non-resident. Okay. So it shall not be included in total income merely because it has been credited in NRE account maintained with an Indian bank by the sequire. Okay. So this was a case that he credited the amount in NRE account. NRE is non-resident external. Okay. There are two types of non-resident accounts for NRIs basically. Okay. Non-resident Indians, they can maintain two accounts in India. Okay. One is NRE, one is
NR.
NRO. NRO. This is non-resident external. This is non-resident ordinary. Okay. So that non-resident here, that person, okay, is actually for NRI. Okay. Non-resident Indians. Okay. So right. So others can also keep that account, but this is mainly for non-resident Indians, where this NRO name is ordinary. Okay. So this is for Indian income. He will have some Indian income, right? He might have given house on rent in India, whatever, correct? So Indian income is deposited here. Okay. And foreign income is deposited here. Okay. Just to demarcate the two. Because this Indian income will be fully taxable. Foreign income, you will have to see what is taxable, what is not. So just to differentiate between the two, they have two accounts, NRE and NRO. So that person, he had an NRE account. He just deposited this amount in NRE account. Okay. So depositing in an account will not determine whether it is earned in India or not. Okay. Earned will be determined based on your incidence of tax table. Okay. That's why the court said that although you deposited in this account, it is not taxable. For taxable or not, you will see the residence incidence of tax table. Here, he is a non-resident and is rendering service also outside India. Okay. So, and he has not received any amount in India. Okay. In this case, he did not receive amount in India. Later on, he parked it in NRE account. Okay. So, NRE account is always the second incidence when you will transfer your first-hand income into NRE account, or NRO will be, of course, your Indian income. Okay. So which is why in this case, and he was a non-resident. So actually he fell under which part of the table? He fell under this part. Income accrued deemed to be received outside India. Okay. This is for other income. These two are for business or professional. Control in India, not control in India. This is for all other income. Your interest income, salary income, all other kinds of income. Okay. And this one, if we see here, it is taxable only for OR. Okay. Hence, court said that it is not taxable for 8%. Okay. This is that case law. Right. So income received in India is what we have seen. We needed to see four things. Income received in India is the most straightforward. Okay. Anything which is received in India, that is income received in India, first hand. Okay. So this is income received in India. This is what you have seen first. Okay. Next is deemed. What is income deemed to be received in India? So income deemed to be received in India, deemed to be received in India, accrued in India, deemed to be accrued in India. These four terms we are going to see. So deemed to be received in India is, okay, there are certain things, just to be very clear, okay, the government has said that these incomes are deemed to be received in India so that they don't escape taxability. Okay. Sometimes because certain accounts and all, okay, for certain accounts and all, okay, just give me one moment. Okay, sorry. So here income deemed to be received in India. Okay, what is income deemed to? You have to add this deeming provisions only when it is not clear that income is received in India. If it is clear, then it will go in income received in India. Okay, there are certain things which are not clear that whether it should be treated as received in India, because some accounts and all might be in some other place. Okay, so the actual income is not received in India. Okay, then what is to be done? For cases like that, you are actually clearly defining what is deemed to be received in India. First thing is your PF account. Okay, in your PF account, annual accretion in the previous year to the balance at the credit of an employee participating in RPF. Okay, so annual accretion in the previous year. Accretion means increase. Okay, so you all have provident fund accounts. Whoever works, they will have. Whoever works, they are going to have PF account. Okay, so in PF account, the major account is RPF, which most people have. Okay, recognized provident fund. You will see more about RPF in your salaries chapter, which will be next. Okay, so annual accretion means whatever increase is there in the RPF account. Okay, that is treated as income which is deemed to be received in India. Okay, this is just to make sure this account can be anywhere. Okay, right. So one can say that, okay, it's not income which is received in India. Just to make sure they have said that whatever amount, whatever increase happens in your PF account, that is income received in India, deemed to be received in India. Okay, they're just defining some income. They're just defining some income which is which they want to make it clear that this is received in India, hence taxable in India. Okay, wherever there can be doubt, that has been clarified. That is nothing but income deemed to be received. Okay, nothing else than that. So annual accretion in the previous year, this is one. Okay, and to the extent. Okay, this again you will study in salary. That time it will be more clear. Your employer's contribution in excess of 12% of salary is taxable. Up to 12% of salary in RPF is not taxable. It is exempt. If it is exempt, then it will not be deemed to be received in India because it's exempt income. Correct. So whatever above 12% you get, that will be deemed to be received, and interest exceeding 9.5%. Okay, up to 9.5% is exempt. So this you will see in your salaries chapter in detail. So here just is the PF point. So PF, wherever it is received, okay, so it will be deemed to be received in India. Okay. Now next is transferred balance in RPF. This whole thing actually, this is actually covered in detail in your salaries chapter. Okay. So transferred balance of RPF is sometimes you maintain an account, PF account, which is not recognized by the Provident Fund Commissioner. Your employer has an account which is not recognized. As I said, details we will see there. Okay, in salaries chapter. So, and when that employer wants to get recognized, he will apply to the Commissioner of Income Tax. If he gets recognition, then your URPF or unrecognized provident fund money is transferred to RPF. Okay, so they are talking about that point. Okay, transferred balance in RPF to the extent liable to tax. When it is transferred, there is a particular way to calculate taxability. So whatever is exempt, you leave that. Whatever is taxable, that part is deemed to be received in India. I'm just making it clear so that it does not escape taxability. Next is employer's contribution under a pension scheme notified under 80 CCD. Okay, so it's NPS or Atal Pension Yojana, National Pension System, or Atal Pension Yojana, NPS or Atal Pension Yojana. Okay, So this is pension scheme. So you can, when you normally you will deposit some amount, your employer will also deposit like a PF only. Okay, but this is for pension. In the end, you will get pension out of it. Okay, right? So employer's contribution in this is deemed to be received in India. TDS, tax deducted at source. Okay, so you have a separate chapter for TDS. It will be examined in detail. But for now, if tax has been deducted, it is deemed to be received in India. Okay. Deemed profit. So deemed profit is that profit, anything which the law is considering to be profit. Okay. Certain things will be straightforward profit, but certain things called as deemed profit. Okay. Which you will see in various provisions of the Act. Okay. Mostly we'll examine this in PGBP, certain deemed profit. So for now, in this case, you only have to understand that any deemed profit, where under the Act the word deemed profit is used, it is deemed to be received in India. Okay. And then income from undisclosed sources. So this is like black money. Okay. This is taxable at 60%. Okay. So when you have income from undisclosed sources, okay, that is black money. Okay. So the government doesn't know the source, how we have got it, but you have accumulated that much of black money. It is deemed to be received in India and it will be taxed in India. Okay. Right. So these are the examples of income deemed to be received. You can just see these are just some accounts. Okay. Some TDS and deemed profit, which are considered as deemed to be received. Okay. It's just been added in this clause to just make sure that it doesn't escape taxability. Right. These two are done. So these two are fairly simple. Now deemed to accrue or arise in India. Okay. Next is income deemed to accrue or arise in India. Okay. So one is income from connection in India. Okay. One is income from connection in India. What is it? We will see. Okay. Then salary earned in India. Salary earned in India using Indian territory is deemed to accrue. This is straightforward. Now this one point is salary received from government of India by an Indian citizen for services rendered outside India. Okay. So this salary received by government of India by an Indian citizen, but he is rendering service outside India for the Indian government. Okay. Such salary is deemed to accrue or arise in India. Okay. This point will be repeated in many chapters. Okay. Right. For such employee, allowances, salary is deemed to accrue or arise in India, so fully taxable. But allowances and perquisites are exempt. Then dividend paid by an Indian company. If an Indian company is paying dividend anywhere, okay, it is deemed to accrue or arise in India. Interest payable by specified person. We will examine this also. And these are three other specific things: income from royalty, technical services, and deemed receipt of gift by non-resident. So these are all points which we have to see. There are 8 points in all, which are income deemed to accrue or arise in India. So fully taxable in India. Okay. So the most complex of this is income from connection in India. Okay. Rest will not take much time. So income from connection in India. Okay. Income from connection in India. So what is income from connection in India? The first point there, right? All income accruing or arising whether directly or indirectly. Okay. One is through any business connection in India. Okay. What is income from connection in India? Income accruing or arising through any business connection in India or through any property asset source of income in India. And So the transfer of a capital asset situated in India. B and C, you know, right, already. It must be taxable in India. Income through any property, asset, source of income in India. Okay. Using Indian correct. Here you are using Indian territory, correct. So it will be taxable in India. It is deemed to accrue or arise in India. Okay. This is straightforward. Second is you're transferring capital asset in India. You're transferring any house in India. So it will be taxable in India, correct? So these two are straightforward, B and C. Correct? The only thing we have to examine is through or from any business connection in India. So what is business connection in India? Okay. So this is income from business connection in India. Okay. So income which arises outside India, because of which income which arises outside India, because of now we know income which is arising in India, received in India is taxable. That we know. Okay. So we're talking only about income which arises outside India because of business or professional connection in India. Okay, is deemed to accrue or arise in India. So here income from business connection is income arising outside India because of business professional connection in India. So this is income arising outside India, received outside India. Okay, there is some key connection in India. Okay, so let's see what that is. Okay, so we are seeing, we are examining this first point, income from connection in India. This point had 3 subpoints, out of which second and third were straightforward for us, correct? And the first one we are seeing income through or from any business connection in India. Okay. So what is business connection? So that let us see, we are examining business connections. Okay. So first thing is, right, business activity carried out through a person, okay, who is acting on behalf of the non-resident. Okay. Some person is carrying out the business activity. He is running the business outside India, receiving outside India. What will be treated as connection in India? Okay. It is business activity carried out through a person acting on his behalf, that is behalf of the non-resident. Okay. Okay. Who has or habitually exercises in India authority to conclude contracts. Okay. When they are saying authority to conclude contracts, the normal employee cannot conclude contracts, right? Concluding means you are finally, um, it's like you are able to close contracts. Okay. This field we are agreeing the term and you are giving a go off. Okay. The flagging of the contract. Right. Can a normal employee do that? Or someone important will do that. Right. So he has, okay, or habitually exercises. Habitually, the meaning is important here. It says that something which you are doing regularly. It's not an isolated transaction. Okay. So he's concluding. So only thing important for you is he's concluding contracts for NR in the name of the NR. Okay. In the NR's name, he's concluding contract, or okay, he's helping in transfer of ownership, granting right to use property or right owned by the NR. Okay. So he has some property or something, certain things in India. In India, he is granting ownership to other people. So that guy on behalf of the NR. Okay. Or for provision of any services for the NR. So this will be treated as business connection. Okay. If he is doing these things. In short, how will you remember this? Okay. Right. So he is business connection means when a person for the NR or acting on behalf of the NR for NR, a person, what he is doing, he is habitually exercising authority to conclude contracts. That is, he is concluding contracts in the name of the NR, transferring ownership, granting right, Okay, like he's giving license, lease on behalf of the NR sitting in India. Okay, or he's providing some services here regularly for NR. Right, that is treated as business connection in India. Business connection is there in India, the income is deemed to be accrued in India. Okay, this is taxable for difference. What difference does it make is, if for normal business, if we which we saw in the incidence of tax table, okay, there is only the connection, like um, what we saw in the incidence of tax table. Okay, that income is outside, right? Business is outside, income is outside. If the business uh, has been set up in India, controlled from India. Okay, for that we saw that non-residents were not taxable, correct? For that point, right? But if business connection is proved, then it is taxable for all. Okay. So this part is like what I am explaining you now. You have to understand. You don't have to understand in detail. Okay. What you have to understand in detail in this chapter is still incidence of tax. Okay. So these are like, you just need to understand superficially. Okay, what is happening, not in detail. These points. Okay. So this is a part of your residential status, which is why I am explaining this to you. Okay. So here, has or habitually exercises authority to conclude contracts. So what is business connection? In short, he's concluding contracts in the name of NR, giving ownership, granting license, okay, giving right to use of property. So he's basically, he has like something like a power of attorney from the NR to deal in his properties. He has to be an important person, okay. Only then he will have such major right. So that will be treated as a business connection in India. Okay. Now, point number B is he maintains stock of goods and delivers it on behalf of the registrar, on behalf of the non-resident. Okay. He maintains stock of goods. So on non-resident is outside. Okay. Money is received outside directly. Okay. But this person is sitting in India and he is maintaining that stock of goods. Okay. And he is delivering it for him. And this person is based in India. He is based in India and he is constantly delivering goods and all for the non-resident. Okay, even though these goods are outside. Okay, that will be treated as business connection. Always what you have to understand is, if any of these things are in India, then you are directly using Indian territory. So you don't need to discuss this much. It's directly Indian income. Okay. So here the things are, everything is happening from outside India, but there is a connection in India that we are seeing. Second one is maintaining stock and transferring on behalf of NR. Last one is securing order in India mainly for the NR. Okay. So that non-resident is he is an author. He has an agent in India. He is regularly here. He's finding people who want to buy those books and he is securing orders for him regularly. Okay. So then here also, those people will pay directly to that person outside India. He will send books from there. This person will not do anything, but he is getting orders for him. That is business connection. Okay. So very simple. So if you see it that way, then it is simple. As I said, you only need a superficial knowledge of this, not very detailed. That is after incidence of tax. Okay. And these are all business connections in India. Okay. This is termed as business connection. Now, some exceptions are being given. What is not business connection? Just to be sure. Okay. So one is broker. Okay. So any general broker, general commissioning agent. Okay. If a non-resident is using his activity. Okay. And the broker in general deals with it. Okay. He is not dealing only for that non-resident. He he has many customers. Okay, the broker has many customers, is not directly dealing only for that particular non-resident. Okay, so then in that case, it will not be deemed to be business connection in India. A general broker, like broker has been excluded. You need a person who is specifically working for him. Okay, a general broker who, yeah, this time he went to a broker, he had some data he has given. That's all. It's an isolated transaction that will not be treated as. So general broker or general commissioning agent, okay, it is, if any business activity through them is not business activity. But if that broker, he is a broker, but he is mainly working for NR. He regularly works for that NR and he is giving him substantial amount of business. Okay, that means it's not that he is working generally. Okay, so see, the difference is, if I have a shop, many people come by, and that's one thing. If I have a shop and I deliver 25% of my goods to one particular person, so I'm particularly dealing with one person, correct? So it is like that. If the broker is mainly working for NR, okay, then he will not be deemed as broker. It will become business connection. But if he's a general broker, it is not business connection. In short, I'm telling you, first exception is business through broker, general commissioning agent, okay, is not business connection. That's it. Okay. Second is, second one is business of non-resident, which is purchase of goods in India for export. Now, for export promotion, lots of things are in export. There are lots of things which are exempted. Okay. You will see in your chapter of profits and gains of business of profession how most of the things in export business, the government exempts it. Many kinds of tax and all exempted. Why? Because government wants to promote export and get foreign exchange. Okay. So which is why if a non-resident is only doing this business, is purchasing goods in India, okay, for export. He's purchasing goods in India and he is exporting it. That's all. Okay. So then it is not treated as, okay, business connection. Okay. This is a special exemption. It is not that because he's purchasing goods in India. So there is some connection here. Because for export, government wants to exempt, they have exempted it. Right? So one is, what are the exceptions? One is broker, general commissioning agent. Use their service, not business connection. If an NR is dealing in activities of purchase of goods in India for export, no business connection. Okay. And then there are two things, very simple. One is news agency. Okay. So news work and all, it is like considered as, you don't impose too much of tax on it. It is considered as something which is important for the whole world. Okay. So news agency, collection of news and transmission out of India. They're collecting news. So normally who will do it is foreign news agencies, newspapers, magazines. Okay. They are doing some documentary, something in India, and they are sending it out of India. Okay. So that is not treated as business connection. Okay. Journalistic activity is excluded. Similarly, here, last one is cinematography film. So shooting of movies is also excluded. Okay. So the only condition is they are shooting here for foreign purpose. Okay. So, so the thing is, non-resident individual who is not a citizen of India. He should not be a citizen of India. If it is a firm which is shooting that film, no partner should be a citizen or resident in India. If it is a company, no shareholder should be a citizen or resident in India. It's purely a foreign venture. They just want to come, say, normally these are all for documentary kind of things. Okay. You have to just come, shoot it, and then they'll just send it out. They're not doing any business in India. Okay. So 3 and 5 are related. Journalistic activity, okay, for transmission outside India, shooting of film for transmission outside India, excluded. Okay. Fourth one is foreign company engaged in business of mining of diamonds. Okay. So companies which are in the business of diamonds, okay, you have to display diamonds. Diamonds do not get sold like that. Okay, when you have diamond, you just display them. When you display them in say 50 different places, then it gets sold in one place. Okay, when you display uncut and unassorted diamond, that is raw diamond. Okay, you are displaying in an area where the government has permitted you in a special zone notified by the government. Okay, so this will not be considered as sale, just display. When it is sold, then it will be considered as sale. This is just display, but it's key to this business. It will display in 50 places, in one place it will get sold. So they will not be paying tax in all those 50 places, right? Right. So that's it. So these are your 5 exceptions. Okay, for business connection in India. So business connection had 3 points. Okay, and exceptions had 5 points. Broker, general commissioning agent, purchase of goods in India for export, news agency, shooting of cinematography film, and display of uncut diamonds. Okay, these are 5 things. Okay, which will not be deemed to be business connection in India. There is no income, and you will not. This will
Sir,
not. Yes, Himanshu.
sir, regarding first point, broker, what kind of broking services can be provided? Means without any taxable income.
Yes, there are 2 kinds of brokers. So if you are using a general broker service, okay, the general service of broker, then there is no tax. So he is not working for you in a concerted manner regularly. Okay. For getting business connection, like we had seen earlier, we've seen the words habitually. Okay. So habitually exercises in India or habitually maintains a stock of. Habitually means that is being done with some sort of regularity. If you are using some broker service or something as one of a kind, once in a while, so that is not treated as business. But here, next point says that if he works mainly or regularly for NR, then the broker will not be deemed as broker. He'll be deemed as his agent.
Okay.
Okay.
But any kind of services can be provided as a broker. Means maybe insurance or any kind.
Yeah, any kind of services can be provided. Okay, it is any business activity. Business activity has not been defined. Okay, you can, you can go for any kind of business activity. Okay, so then after 5, you have, okay, there's one more point here. Okay, in addition, so these are the points here are mostly completed. Okay, here it says if not having significant economic presence in India. Okay, this note says if not having significant economic presence in India and all operations are not carried out in India, then income deemed to accrue and arise in India will only be that part of the income attributable for the business of operations carried on in India. So what they are saying is 2 things can be there. Okay, they can have a significant economic presence. So what is significant economic presence? Just a small thing. Okay, I'll tell you that. So if they don't have a significant economic presence in India, that is, they are fringe players. Okay, then you will have to just make sure that you will tax only that part of income which is attributable to operations in India. Okay, when if their entire activity is having an income of 1000, okay, and they have business connection in India also, but out of this business connection in India, the income they are making is 50. So here they're just clarifying only this 50 will be taxed, not this 1000. Whatever they are getting out of business connection in India, only that will be taxed. Okay. So what is for this we need to know what is significant economic presence in India. Okay. Okay. And we'll see that. And just before that, An asset or capital asset being any share or interest in a company or entity registered or incorporated outside India. Okay, so here this is an asset which is nothing but share or interest in a company, okay, which is registered outside India. Okay, this is a separate point. It is deemed to situated in India if it derives its value substantially from assets located in India. That is, if you have an asset, capital asset, okay, which is located outside India, okay, but it's in the whatever investment it is making, say in Indian companies or anything which is Indian, okay. So that is, it is deriving its value substantially from assets located in India, okay. Then that foreign capital asset will be deemed to be situated in India. That is, here what we are saying. This is a foreign company. You have got a foreign capital asset. It's in foreign country. Income is being received in foreign country, right? So no connection with India. But this is deriving its value. Okay, all its major investments are Indian. Okay, substantially deriving its value from Indian companies. Then we will consider that this asset is situated in India itself. So whole income will be deemed to be received in India. Okay, this is one separated, isolated point. Okay, and this thing, this is now this year, it's not important for you, but this particular point, okay, it is not applicable for investment in category 1 or category 2 of FPI regulations. Okay, so there is a SEBI regulation called as SEBI FPI regulations. Okay, so if the asset is held by a non-resident by way of category 1 or category 2 FPI, so for category 1 or category 2 FPI investor, okay, he is holding this as that, then there is an exception for this. Okay, this kind of asset, even if it is deriving its value substantially from India, it is still treated, it will not be treated to be in India. Okay, this is an exception given by SEBI. Okay, that's it. Now, okay, so we can even actually ignore this for the time being. What can be asked of this is like they can just ask you something objective and state that it is SEBI category 1 or category 2 FPI. Okay, and then that asset derives its value substantially from Indian asset. Will it be considered to be an Indian asset? And answer will be no. Okay, now here significant this point as I'll explain you what is significant economic presence. Okay, what you will treat as significant economic presence and what you will treat as non-significant economic presence. Okay, significant economic presence will constitute business connection in India, so whole thing will be taxable for them. Okay, so first of all, any transaction, what is significant economic presence of an NR in India is a transaction for any goods, services, or property carried out by a non-resident with any person, okay, including provision for download of data or software. So in general, any transaction for goods, services, or property carried on by him, okay, if the aggregate payment on such transactions exceeds the prescribed amount. So in short, what we can say is any transaction by an NR, okay, which exceeds the prescribed amount. The aggregate payments arising, whatever collections he is making, that exceeds the prescribed amount. Okay, so there is an amount which is prescribed in the rules, but that is not in your course. Okay, currently this amount is 2 crores. Okay, 2 crores is the prescribed amount. This is not in your course, so you need not remember the figure. Just need to know that any transaction where aggregate of payment exceeds the prescribed amount, that is significant economic presence. So if it is less than 2 crores, it is not significant economic presence. That's all. Okay. And or either this, or there is another thing. Okay. Systematic and continuous soliciting of business activities or engaging in interaction with such number of users prescribed. Systematically, you are interacting with a certain number of users in India, sending your ads out. Okay, and whatever you are trying to indulge with Indian buyers systematically. For this, how there are certain number of users prescribed here. Okay, number of users is 3 lakhs. This is 3 crores, 2 crores, this is 3 lakhs. So if you're systematically dealing with over 3 lakh people, okay, then it will be treated that you have significant economic presence in India. Less than that, you will not be treated. Okay, that's all. In this, you only have to remember this, and you don't need to write these figures. Okay, for you, it is just you have to say that exceeds the prescribed amount. That's it. Fine. So this is something regarding significant economic presence. Okay. A significant economic presence, it is not necessary that agreement should be entered in India. No need. Everything can be foreign. Okay. The NR has a residence or place of business in India. This is also not needed. Nothing is needed. Okay. That he renders service in India is not needed. Like here you can see, he is just soliciting that number of people. He's trying to send his goods to more than 3 lakh people. Okay. It may not result in sale. If it is soliciting, then he has a significant economic presence in India. Okay. So it's not essential that the agreement is entered in India or NR lives in India or he renders services in India. No. Okay. Significant economic presence, these things are not needed. Okay. And then only so much income as it attributable to the transactions of activities referred above shall be deemed to accrue or rise in India. Okay. So whatever income he has got out of these transactions using Indian territory, that will be deemed to accrue or arise in India. Okay. So now, so these are some additional points. Okay, this is here. The first one is so income attributable to. So what we have said here is only so much of income. This is attributable to transaction in India shall be deemed to be accrue or deemed to accrue or arise in India. So this income attributable to the operations carried on in India. Okay. So it will include income from advertisement targeting customer residing in India. Okay. Right. So either advertisement targeting customer in India or someone who is accessing the advertisement from IP address of India, Internet Protocol address, that is IP address located in India. So he has given an advertisement, and some of us have are able to access from an IP address located in India. Okay, that will also be taken into consideration for income attributable to the operations in India. Okay, right. Then next is sale of data collected from a person who resides in India or uses internal protocol access located in India. Okay, sale. So this is second is first is advertisement. Okay, for income attributable to operations carried in India, first you will see is advertisement. Second you will see is sale of data collected from person who resides in India or using internet protocol address in India. You are getting data from an Indian person. When you are selling data outside India, receiving income outside India. Okay. But data is collected from Indian person or from Indian IP address. Okay. And the same thing, point number 3 is related to this. Here you are selling the data directly. Okay. Here you are selling goods or services using that data which you have collected. That's all. That's the only difference. Okay, here you are selling data you have collected and you have sold the data to someone. Third point, you have collected the data and you are using it for your own sales. Okay, so this part is a little complex. You just have to go through it once or twice. Okay, so as I said, this part, the importance is not that much. Okay, just need to know it superficially. Okay, so then, or if there is an eligible investment fund, okay, it will not constitute business transaction. Any word comes as eligible, no? So that will never constitute as income normally. Okay. So that's why if you get it as eligible investment fund, it will not be business transaction. It is eligible means it has been exempted by the government. Okay. Then so we are almost towards the end. Okay. We will not start any new topic today, right? So then income from property, assets or source of income in India. Okay. So this, income from property, assets, source of income in India is deemed to accrue or arise in India. There is no question about it. Okay. So it can be any kind of property, tangible, intangible, okay, movable, immovable. Okay. If the source is situated in India, transfer of capital assets situated in India. So this is something you know already. Okay. When you are selling something which is in our land, Indian property, Indian source of income, which is giving you the income, it is taxable in India. Okay. Okay. Now, last few points. So we will be finishing a bit early. Okay. And then I'll just tell you about your timings after that. Okay. So just stay on. So now, salaries earned in India. Okay. Salaries earned in India. Okay. Salary payable for rendering service in India. Okay, this is straightforward, right? Okay, salary in India, if you have received any salary in India, it will be taxable in India, correct? So services rendered in India, and this is just an additional point. If there is any leave period preceding or succeeding the service, okay. Sometimes there are people who have some leave with them. So what they do is, like, if their last date is after 6 months, they have 2 months of leave. And they say that, okay, instead of 6 months, you leave me after 4 months and use up that holiday. Okay. So such leave period preceding or succeeding your services, that will also be treated as part of your service period. Okay. So this is general knowledge, like generally known to everyone. Okay. So this is basically salary for services rendered in India is it accrues or arises in India. Okay. Now this is, I told you that this part will be repeated many times. Okay. So salary payable by Government of India to Indian citizen for services rendered outside in India is deemed to accrue or arise in India. Okay. But allowances and perquisite for such person is exempt from tax. Okay. This part you will again see in salaries. These all are straightforward things. Okay, there's that little part in between where you have that income from business connection in India, significant economic to this. But just go through 2, 3 times. Okay. If you have any doubt, you can ask me. As I said, like, that is not that important. So you need not worry about that. In this chapter, what is important for you is the incidence of tax table. That is the part which is important. Okay. So income from dividend. Dividend paid by an Indian company, it is always deemed to accrue or arise in India. Okay. Right, we had seen there right at the top when I showed you those 8 points, right? So income from dividend dividend paid by an Indian company, wherever it is, in India, outside India, it will be deemed to accrue or arise in India. Okay. Right. Now, last three tables are there, very simple. Okay. Last three tables. Income from interest. Okay. Now these things, now till now it is now established. Two things are established, correct? You all know that. That income arising from Indian territory or income received in India. Any of these two, if you have, it is fully taxable for all, correct? Fully taxable. Okay. Other name for income arising from Indian territory is income being, okay, income accrued or arising from India. Okay, or deemed to accrue or arise in India. Okay, these two things are fully taxable. Okay. Now we are talking of things which are other than this. Okay. So income from interest, following interest payable to non-resident is deemed to accrue or arise in India. This interest payable to non-resident. Okay. So naturally, we know that, okay, you are paying interest to non-resident. Okay. So when will you pay? When will you pay interest? When will you pay interest is when you borrow some capital, correct? You have borrowed some capital, that's why you are paying interest, right? Whatever you are using that capital for, but you have borrowed some capital. That's why you are paying interest, correct? So in this case, you have borrowed capital, but you are paying the money outside India. Okay, right? So now this income, the interest is an income of the non-resident, correct? So it is interest, it's an income of the non-resident. Fine. So he is now in India, okay? Whatever loan he has provided to you, okay? So he would have provided it from his capital, okay? In this case, we are assuming that he has provided out of foreign source only. Right? But if he is using Indian source, Indian territory, it is anyways taxable. You don't need this point at all. Okay. Here the thing is, we are saying he has used both foreign source and he has given you a loan. He is staying outside India, you are in India. Okay. So now in this case, okay, it is that interest is deemed to accrue or arise in India in these conditions. If interest is payable by the government, okay, if interest is payable by the government, it is always deemed to accrue or arise in India. Okay. Second is, it is payable by a resident person or an NR. Okay. It is payable by a resident person or by non-resident. Right. If it is payable by a resident person, see, it's a negative condition. Okay. So money borrowed is not used for. Okay. If it is not used for this, okay, income is deemed to accrue or arise in India. Okay. If this resident person has borrowed money, right? Non-resident has given the loan. He has borrowed it. So he has borrowed the money and is not using it for business or profession carried out by him outside India. Okay. If it is not using for business or profession carried out by him outside India, okay, then it is deemed to accrue or arise in India. Okay, interest is deemed to accrue or arise in India if money borrowed is not used for business or profession carried outside India, earning income from any source outside India. Okay, so this will be the case when it will be deemed to accrue or arise in India. Okay, for a resident person, right? And for a non-resident person, the condition is reverse. Money borrowed is used, so the income is, yes, always read it from this sentence. Income is deemed to accrue or arise in India if the money borrowed is used for business or profession carried on in India. Okay, is using the capital for in business or profession in India, only then for non-resident it will be deemed to be accrue or arise in India. For a resident person, okay, if it is deemed to be accrued or arise in India, okay, if money borrowed is not used by him for business or profession carried outside India, or income from any source, or earning any income from any source outside India. So basically, as long as if the money borrowed by this resident person, he is not using it for any activity outside India. Okay, he is using it in India. He is not using it outside India. Because he is using in India, that income is deemed to accrue or arise in India. Okay, if he is because he if he is using it outside India, okay, it's outside money is using outside India. We have nothing to do with it, correct? So only if he is using in India, it will be taxable for the resident person. For non-resident person, okay, it will be deemed to accrue or arise in India if only there's only one case. If he is using that money for business in India, only then it is taxable. Otherwise, we don't worry whatever he is doing with it. Okay, non-resident. If used for earning an income from any other source in India, okay, interest not deemed to accrue or arise in India. This only for this last point is only for non-resident. It is an exception. Okay. So here we are saying that if money borrowed is used for any business or profession in India, okay, then it is deemed to accrued in India. This is only for business or profession. If he is using for earning any other income in India, like interest in securities or anything, then it is not deemed to accrue or arise in, okay, for non-resident. If you have understood this first point, then the second and third will be very easy. Okay, it's all totally based on this now. Second is income from royalty. Okay, so here income from interest. How you will get income from interest? From a capital. Okay, how you will get income from interest? There is a non-resident. He has given a loan. Non-resident has given a loan, and that's why this person is giving interest back. Okay, so this is very similar to this. This is royalty. Okay, so you are paying royalty to a non-resident. Okay, why you will pay royalty? Because he has given you something, right? He has given you any information, or he has given you, some data or something, because of which, okay, he has given you data because of which you are paying him royalty, correct? So if you see the flow, it is similar to that of capital. He has given you capital, you are giving you interest. Here he has given you an intangible asset, and you are giving him royalty, correct? So that way flow wise it is same. So both also follow the same rule. Following royalty shall be deemed to accrue or arise in India. Government always deemed to accrue or arise in India. Same year, same. Okay. Government always deemed to accrue or arise in India. For a resident person, same thing. Resident person, right to information, etc. Okay. So here we said the money borrowed is not used. Money borrowed is not used. So here main asset was money borrowed. Here main asset is right to information, right whatever you have got. That is not used for business or profession carried on outside India. Okay, or earning any income outside India. That is, he is not using it outside India means what? He's using in India, using it in India. Okay, so if he uses the right to information in India, okay, then it will be deemed to accrue or arise in India. Simple thing you have to see. Okay, simple thing. Whatever the main asset has been given, is it being used in India? Okay, if it is being used in India, then it will be taxable. Okay, for resident person, right? And for non-resident person, there is it's always specific. Okay, so right to information etc. is used for business carried on by such person in India. So for business, he's using it specifically for business in India. Okay. So the non-resident person is using it, this non-resident person. So here, he's also non-resident, he is also non-resident. Okay. The person who has given right information, he is also non-resident. The person who has taken, he is also non-resident. Okay. But this one who has taken is using it for business carrying business in India. Okay. Then that royalty will get taxable. Okay. For earning any income or source in India. So this here, the previous point, what we saw is only only money borrowed is used for business or profession carried on in India, only then it is taxable, not applicable for other income, correct? For others, it is applicable for other income also. Applicable for business also and for other income also. So last is income from technical services. All are same things, okay? They all have the same flow. So payable to NR. NR has given you technical services, okay? And you have to pay interest to, yes, you have to pay some sort of income to him, whatever name you call it, okay? So for technical services, you are paying. Again, government always deemed to accrue or arise in India. Resident person, okay? Such services, always the principal asset. You will always see, so you will always talk of the principal asset, not the income out of it. Such services shall not be utilized for business or profession carried on outside India, earning from any source outside India. In other words, he is not utilizing it in India. If he should not be utilized outside India means what? Utilized in India. Correct? So if he is utilizing whatever technical service he is taking, resident person is utilizing it in India, then that income shall be deemed to accrue or arise in India. Income which the non-resident is getting shall be deemed to accrue or arise in India. Non-resident will have to pay tax. Okay. And the third one is if the technical service is given to another non-resident, okay, NR, and he is utilizing it for business carried on in India or for earning any other income in India. Okay. In this case, it will be deemed to accrue or arise in India. So all three tables are very similar. You should do a comparative study. Okay. These tables are important. As I said in between, whatever we did, okay, business connection and all that. Okay. That is of moderate importance. Okay. So if you are able to understand it from a wholesale point of view, overall, okay, this is this, that is fine. If you're not able to understand everything in it, that's okay. Then again here, this becomes important, okay? Here onwards is income from interest, dividend, royalty, and technical services. These tables you should know. This is asked regularly, okay? Last point of this chapter now is deemed receipts of gift. Okay, deemed receipts of gift. So here, so this is gift. Okay, gift has a section in income from other sources, which is 56 to 10. When we do income from other sources, that time we will see what are the things which are gifts. Okay, there is a list of gift. Okay, so right. So when a non-resident or a foreign company receives any sum referred to in this section, okay, that is which is deemed as gift. Okay, so what at this stage what you should remember is uh, gift received as per income from other sources. Okay, whatever is called as gift, income from other sources, when a non-resident or foreign company receives gift from a resident person, okay, and they have received it outside India and on or after this date 5/7/2019. Why this date is like provision the provision would have started from that date. That's why you have this date. It's not important for you to remember that date. Just remember it is applicable now. So this is very simple. It is non-resident or a foreign company receives a gift as defined in income from other sources. Okay, and the gift is received outside India, then it will be treated as income deemed to accrue or arise in India. Okay. There are certain things which you will connect after you finish all heads of income. Because this is a general chapter, right? This holds good for all your heads of income. There will be certain things from this chapter that chapter. Right? So once your heads of income are over, you will be able to have better sense of it. So that's all. This is one last question. Okay. So you all try to solve it. So Miss Monica, a foreign national, comes to India every year for 90 days since 2005-6. Determine a residential status for PY 22-23. Will your answer differ if she comes to India for 100 days instead of 90 days? Who will solve this? Without seeing. So first thing is she's a foreign national. Okay. She's coming to India every day for 90 days since 2005-6. 2005-6 is more than how much? 18 years or so. Correct. So every day she's coming for 90 years. Determine a residential status for PY 22-23. So in PY 22-23 and 4 years before that. Okay. So 20, 22, 23. Okay. And 4 years before that. So 21, 22, 20, 21, 20, 19, 20, 19, 20, 20, 21, 21, 22, 22, 23, and one before 18, 19. Okay. I've just written 4 years for now. Okay. She's coming for 70 days. Right. So the 70 days here, so all years before that, she's coming for 70 days. But these 4 years total will be how much? 7 4s are 28. 70 days or 80 days? How much? 90 days, sorry. 90 days. So 90 days. And for these 4 years also, she will be coming for 90 days, correct? Is regularly coming. So these 4 total, how much it is? 9 4s are 36. 360 days. Okay. So she falls into the second exception. Second exception, second basic condition is closer for her. But she is a foreign national. They have not mentioned about person of Indian origin. Okay. So when they have not mentioned, you cannot consider as person of Indian origin. Okay. So no exception applies to her. Okay. So no exception applies to her. And condition, second condition is closer. This is 60 days. This is 90 days. Okay. And this should have been how many days for second condition, basic condition? For second basic condition to be fulfilled, how much should this be?
60, 60 days in previous year and 365 days in preceding 4 previous years.
1 minute. Yeah. Can you repeat it, Shruti?
60 days in previous years
Okay.
and 365 days in 4 preceding previous years.
Okay. Very good. So this is 360, but correct. So she is not satisfying the condition. So she is not satisfying both the basic conditions. So she'll be what? Non-resident. So if she is non-resident, then we did not see the additional conditions. Okay. Next point, what they are saying is, will your answer differ if she comes to India for 100 days instead of 90 days? So let's just change data, convert it to 100. Okay. Okay, this is now 100. Now this is 100 and this becomes 400 now, correct? So it has now become more than 365 days, correct? Total of last 4 days is more than 365 days. So now she has become a resident in the second case. Okay. But now again we have to check whether she is ROR or RNOR. Okay. So now this, okay, she is coming from 2005-6. So last 18 years she is coming in the same pattern, right? So for additional conditions, first additional conditions, she should be a resident in 2 out of 10 previous year preceding the previous year. So here all conditions remain the same, correct? This is now 2022, this is 100. And here for previous year, it will be 100 previous one also. Here also she'll be resident. Same for here. Before this also there will be 100. For this one also she'll be resident, correct? Here also she'll be resident. Here also she'll be resident, correct? So easily she is resident for 2 out of 10 previous year. So that is fine. And now second condition is, what is the second additional condition?
720 days in
In last 7 years.
last
Last
7 years.
7 years.
730 days.
720.
730. It's the double of 360.
730. 365 into 2 years.
Okay.
Just always do double of 365. Okay. So it's equals to 365. Okay. So now again, so what will happen? This is like you take this year 100. Okay. Year before the previous year, and before this for 7 years it will be 700 days, correct? Right? If you go to,
Yes.
yeah, this is 100, and 7 years before that it is 100, 100 in all years. It is 700, correct? So we are not getting 730. So she will be RNOR, correct? In the second case. Got it? Okay. Okay, understood? So that is it. So residential status for point A will be non-resident. Point B will be RNOR. Okay, fine. So here with this, it completes our chapter of residential status. Okay, so you can just go through the chapter. Okay, anything or anything you did not understand, you can set up some time with me. Okay, or if you want me to explain in Hindi also, you can do that. Okay, just go through, and any doubt you have, that you can bring. Fine. There's only that business connection. That point is only little complex. Okay. So now, so I'll just put you. So that's it. This chapter is completed now. So we will not be starting any other chapter today.